Welcome. We are back. Another week in the market. Futures are pretty red right now. S&P futures down about 2%. And we got a crazy week ahead of us. Last week, we saw Russia invade Ukraine, and really Wednesday night is when it, begun. And futures were really red, just like how they are right now. Last Wednesday night, and then Thursday morning we opened down like 3% or something like that for the overall market, and then we shot up like 4% intraday on the S&P 500 on Thursday, and then like another 2% on Friday. So like off the lows, I think we're like 6 or 7% off the lows from Thursday morning last week. So we had a very big rally into the end of the week. Song's pretty good. And now we have futures pulling back again. We've seen a bunch of different headlines over the weekend, so there's a lot going on. I'm not really here to be your news provider, so I'll kind of do my job and stick to the charts. But of course, keep up with everything going on. And this week, we're going to also have a Powell testimony. Powell's going to be speaking before lawmakers, and that might give us clues on his remarks or just what he thinks about the geopolitical risks to the U.S. economy. So I'm not sure exactly what the testimony is for. I just saw this. But yeah, I mean, whatever, there's a lot we could get from that. Just in general, his thoughts, also anything related to inflation or rate hikes. I don't know. We all know how important Powell speaking can be for the market in either direction. And then next month, I believe, is the next Fed meeting. So keep both of those things in mind going into the week. I think even North Korea launched a satellite or a missile. I don't even know what they're doing. It's a crazy world. So let's get into everything. We're going to start off with crypto, and then we'll move on over into stocks. Make sure to hit the like button, hit the subscribe button. Another early stream tonight. That's just how it is. And yeah, timestamps. I think the next few days will be up the following morning. So for anybody who's watching the replay right now, if timestamps are not up, they're probably going to be up in the morning. So just for the next few days, instead of them being up same night, look for them to be up the following morning of the stream. And yeah, make sure you're in the Discord. Check out the first link in the description. Make sure you check out the first link in the description. And let's get to it. All right, Bitcoin is down. It looks, I might have just pulled back when futures open. Let's see if it did. It looks like around this was around 1:45, 2 o'clock. So Bitcoin's been pulling back for a few hours now. And you did have a nice rally on Bitcoin on last Thursday and Friday, just like the overall market. It looks like now it's pulling back again. Really, this is, before we even get into the overall market in Bitcoin, this is the easiest way and probably the most common way you're going to see everybody looking at the market this week. So let me just explain it as clearly as it can be. Thursday's low. That's really the main thing you have to remember for Bitcoin and for stocks, okay? We saw huge bounces off of Thursday's low, okay? Nobody knows if that is our bottom for this downtrend we've seen for the past 2 months in the overall markets, or if that's just a mini bounce in a downtrending market, right? A dead cat bounce. But the easiest way to view the overall markets as a whole is Thursday's low. As long as we're still above Thursday's low for Bitcoin, for the S&P 500, the bottom is in, obviously. If we ever break that Thursday's low, then the bottom is not in, obviously. And that's very cliche to say, but you can use something like Thursday's candle, which was a very aggressive buying candle, as a place to manage risk. It's not financial advice, but as somebody who's currently bullish on the market, even on this pullback, I'm bullish on the market going into the week. If we break under Thursday's low, that changes, okay? So I'll explain why I'm feeling bullish about how things are looking just technically. I put out a tweet yesterday saying, like, you know, this is the most amount of opportunity I've seen from just a tech, like if charts were the only thing in the world, which they're not, but if they were, this is probably the best technical setup I've seen in terms of long-term opportunity, not necessarily short-term opportunity, since April 2020. It's so easy to find so many good looking charts right now, and all the indices have classic bullish divergence. I think for the first time in like 4 years, the lump said, well, the S&P has classic bullish divergence for like the first time in 4 years, and all the indices in general have classic bullish divergence. I don't remember the last time I've ever seen that. So you have all that going for you, but let's start off with Bitcoin like we should, and then we'll get back to the market. The only thing is, you have everything with Ukraine going on. You have literally next month, you know, the probabilities changing for rate hikes, how many basis points. Powell is speaking this week. We also have to see how our sanctions and just in general things going on in the world will affect the economy, natural resources, inflation, supply chains. All those things we're in a very, very big area for pretty much every single sector that you could think of right now. So, you know, the charts can look amazing like how a lot of them do right now, but you can't just only, you know, use solely charts as your way to trade. So yeah, that's really it for Bitcoin. Hopefully you can get to a new high off of this current rally, which would be above 40.5K before breaking under 34.3K, which is your low from Thursday. You still actually have the potential for hidden bullish divergence because you made a high low from this low to this low. So as long as that low holds, it looks fine. But if it doesn't hold, probably going to head back down to 30K if you break 34K. Ethereum, pretty similar thing to Bitcoin. No divergence here. You might have a little bit of a harmonic on lower time frames though. So you hit the PCZ of a shark and you might have created another bullish bat after hitting a PCZ, which is really interesting. Yeah, so you have a bullish bat that's, I mean, to be honest, it's already kind of played out. It's hit the B point, which is kind of like the first target of this. So who knows, maybe it does try and double bottom and run back up again. But I'd say in general, like 2.1 to 2.3K, this little zone over here is pretty much what you're going to want to hold. And I think that's very, very clear. The one thing that's actually surprising with everything going on fundamentally is a lot of these charts, at least in terms of risk management, look very, very clear to me. That's like the one thing that makes it a lot easier compared to how things were a couple weeks ago, where we didn't know where, you know, a bottom or at least a support was. We didn't really have one apart from that major make or break area. But when we broke that, and I'm talking about this right now, by the way, apart from this blue zone, if we were to break that, we didn't really know how low we could go, and then we did find out that it was this low. But now we have a very, very clear area across the board, which was literally last Thursday's low to look at. So that's crypto. Crude oil futures are trending higher. Gold, potential bullish engulfing candle over here. Double bottom on the 1 hour, pretty interesting. Let's take a look at the dollar. So the dollar is spiking up like crazy, and the ruble is crashing. So you have that going on as well in terms of currencies. I'm sure other currencies are going crazy as well right now. Max in the chat just said Mitch Ray was looking at the USD to RUB chart. Let me take a look at that as well. I know Mitch is live right now, and another streamer I watch is True Trading Group. So I don't really like going live at this time because I'm usually watching other trading streams at this time. But let's take a look. That's crazy. That is some insane volatility. I didn't mean to do that. But that's just insane. Look at that spike over there. And also, I did see some reports about the Russian market. Let me see if I could pull it up and just get a headline for all of you. All right, this is from Market Rebellion on Twitter. Russia's central bank is pulling a reverse Robin Hood. Foreigners will not be able to sell their Russian stocks when the market opens, which is very, very interesting. Also, I think we have certain banks, like some of the large banks in Russia, are also being kicked out of the SWIFT program, which is like the international way for a lot of countries to transfer funds and a lot of that stuff. It's pretty old, but it's very, very important. If anybody wants to learn about SWIFT, there's actually a really good thread on Twitter. I'll drop it in the chat right now that I read. I just dropped the link to that thread in the chat if you want to learn about SWIFT. So that was another headline over the weekend. So yeah, a lot going on, definitely. So let's talk about the overall stock market and how it's looking going into the week. Make sure to hit the like button and check out the first link in the description. All right. So crazy rally off of Thursday's low. Honestly, this might be the first low or rally or bounce that I've missed in the market probably since I've started streaming, honestly. I mean, if you've been watching the stream for a long time, you all remember what I've been doing, how well it's worked. And the same thing happened. I just kind of missed it because of all the news going on. I just wanted to kind of just be hands off towards the end of last week, which was a really, really good end to the week. But I mean, go back and watch the streams. This low, this low, this low, this low, like literally all of these lows, I was able to anticipate that the market was bottoming, and I put out a bunch of swings, and we had some really good call option trades on like all these lows. And the same thing last week, I told you all that we were once again showing that volume signature, right? That same high volume spike on the SPY at the lower Bollinger Band. But you didn't see me put out any swings at the end of last week. I only shared like, I think like one call option on Friday for premium members that did run like 200%. It was AMD. But I kind of wanted to be hands off. I didn't really feel comfortable trading with everything going on in Ukraine towards the end of last week. So, I mean, if there were any 2 days in like the last 2 months that were kind of the best days to trade, kind of were those 2 days, and I actually missed them. So I'm a little bit frustrated about that. But I mean, that's such a third world problem. So like, it's not even really, something I want to be like stressing about. There's people dealing with much bigger issues in the world right now. So, that's really what happened towards the end of last week. A very, very crazy rally. I mean, I honestly thought you'd also pull back towards the end of the day on Friday, after a 6% rally and heading into the weekend with, which nobody knew what the news was going to be on Friday, on Saturday, and Sunday. I thought we'd actually see a sell towards the end of the day, but we really did. We pulled back a little bit after hours, and now we're down on futures like 2%. So that's where we are now. Let's look at things from a more technical standpoint in terms of the overall market. So the first and most clearest thing that you want to be aware of going into this week is you have 4-hour and daily classic bullish divergence on like all the indices. If you watch my stream, you know that 4-hour and daily classic bullish divergence is like the bread and butter of my swing trading system, okay? Even more than hidden bullish divergence. It's my favorite indicator. It's confirmed on the 4-hour and the daily. The only thing that's weird about it is like, great, it's confirmed now, but it's like typically you see it confirming towards the bottom of a downtrend so you can get the reversal and you can buy near the bottom. The issue is it only confirmed after the 6-7% rally, so it's very interesting to trade the classic bullish divergence in the overall market right now. Even with the if we open down 2% tomorrow because futures are down 2%, even if we open down 2%, like still you're already well off your lows. So it makes it a little bit tougher to have a tight stop. You pretty much have to, if you're playing the classic bullish divergence that the market's developing, and you're using a technical stop, which would be under last Thursday's low, it is a pretty loose stop. That would probably be a 3 or 4% stop in terms of the S&P, which could be like 10 to 15% moves in individual stocks if the S&P were to drop that much again. So that's just a random number off the top of my head. It's not like a real number, but that's what's a little bit tricky about how it looks right now. You look really good technically, but you're already so well off the lows, and who knows how futures and also how the news is going to affect things. So going into tomorrow, my main plan is I'm actually, if we do open red tomorrow, that could be very, very interesting because we could open around, so let's see, we're down 2% on futures. If we were to drop, like 2-3%, then we could come down to this 426 level on the SPY, and I actually like that level for a bounce. So I think, just how we saw that gap down last Thursday being a buy at the open scenario, I do think that if we were to gap down a lot tomorrow, we could see not necessarily like a buy at, who knows, hopefully a buy at the open, but like we could see an intraday reversal to the upside. Of course, pending any news that could come out overnight, you never know. But again, as long as we're back above this zone, I'm bullish on the market again. We just got to hold above this inflection zone. We break under it and then I'm out. So it's a very 50-50 area. That's why I stream set up getting ready for the next wave of the market. It's not super clear just yet, but it does look like a lot of individual names are setting up too, which we'll get to later on. So that's how I'm looking at the market going into the week. Same thing for the QQQ. Major rally, classic bullish divergence on the daily and on the 4-hour pretty much. But again, you're well off your lows. You have this long-term wedge on the QQQ. This is how I have it charted. There's not much resistance, so 360 on the QQQ, which is about 4% higher. And your support, let's say you open down 2%, your support would be about 1% under you. So you're getting good scenarios, you're getting good reward to risk here where there's no certainty that we're going to keep running and running. But even if you were to go long on a pullback tomorrow morning, you could have a pretty decent stop, but you can't really look at it as like a swing trade stop, because again, that's under Thursday's low. So for day trading tomorrow and even on Tuesday, you could get really good opportunity if we pull back into these support zones. But for swing trading, it makes it really tough, because we're already so much off of our lows. We're up 8, maybe even 9%. One second, let me do this correctly. Sorry. Off the QQQ low on Thursday, we're up pretty much 9%. So, you know, 9% pullback on the QQQ is such a big drop for individual names if you do have a stop right under Thursday's low. So, yeah, I'd probably look at this as a descending broadening wedge. I mean, you have a lot of supply lines that you want to be looking at on the 4-hour charts. Like, for example, you can draw these lines on your 4-hour charts for the QQQ and the SPY. It looks like you just broke out of it. Let me actually fix this up in a second. Let's make this like a different color. But it looks like you have like these patterns within the longer term downtrends that you're also breaking out of. Make that white so you can see it. So within a larger wedge, you've broken out of a smaller one. See if this, I'm pretty sure the SPY did the same exact thing. It broke another supply line. Look at it like this, right? So that's pretty interesting. And you also have like a 3 white soldiers candle pattern over here, which implies a continuation to the upside with the MACD crossover. So again, you know, if you pull back tomorrow morning, the futures stay red, you could be pulling back into support for the first time in a long time, which will be very interesting. Apart from the S&P and the QQQ, the ARK ETF looks very interesting to me for the first time in a long time. We're getting some major flips. Remember I told you all to watch the 61 level. It got down to like 58, 50, yeah, 57, 61-ish. But in general, you could just see, you know, you went under it for a little bit on last Thursday morning, but the day before, which was Wednesday, you bounced right, or you pretty much closed at 61, which is your high before the COVID crash and a back test after the COVID crash. You got a bullish engulfing candle on Thursday for the ARK ETF. Fall through price action on Friday, and you have triple classic bullish divergence on the ARK ETF in this long-term wedge. So remember what I've been saying about the ARK this whole entire time? I don't want to even touch it until it breaks out of the wedge, but you're very close to breaking out of the wedge, right? You pull back a little bit tomorrow morning, maybe a couple days this week you go sideways, but you really could break out towards the end of the week on the ARK ETF, and you've been in this downtrend since November of last year. So if it breaks out of this wedge, that makes me bullish on it again. Literally that simple. That's how I'm looking at a lot of these different charts. The Russell 2000 double bottomed off of 187. It got up towards that previous support zone of the range it was in. But again, looking at a gap down tomorrow morning, you're kind of in the middle of the range, which makes it a pretty big 50-50 for small caps in the beginning of the week if you do gap down the Russell tomorrow. It's literally 50% chance you run back to support or 50% chance you run to test resistance. So Russell, in my opinion, is the least clear of all the indices right now. It is pretty close to the supply line on 4-hour, but again, futures. And another one with 4-hour classic bullish divergence, and another 3 white soldiers candle pattern pretty much, which are these 3 large-bodied green candles in a row where you pretty much open and close at higher levels every single time. And then finally the NASDAQ classic bullish divergence. I just look at this, okay? So that's really the easiest way to view the market. We also, there was something else I wanted to bring up. You could look at moving averages, which I really haven't yet, which we're going to do in a second. And there was something else really important. I always forget the really important stuff. Great. I wanted to bring up something else about the overall market. Oh, weekly candles. Before, all right, somebody, if I forget, remind me to look at the moving averages, but weekly candles. We got our first hammer candles on the weekly charts for the market last week. S&P could see this beautiful hammer candle. QQQ hammer candle, first bullish candle on the weekly in a long time. This is the first hammer the ARK has seen since like over here, since like the second week of December. This is the first time we've had a hammer candle on the weekly for the ARK ETF, which is very interesting, like pretty much across the board. And obviously if the indices are all showing these hammer candles, that means a lot of individual stocks are going to be showing these hammer candles. I mean, CLOV showing like almost a tweezer bottom. Let me see if I can find some. Facebook showing a hammer on the weekly. Let's take a look, see if Fisker is showing one. Fisker is showing one off the bottom of a weekly range. So those weekly candles are very interesting. And then in terms of resistance, so we just talked about all the support to the downside, what to look at, but what's our resistance? Let's say we can continue higher this week. What resistance do you want to look at for the overall market for potentially topping out during the week? Clearest one for the SPY is over here, 200-day moving average. Okay, you also have your highs just before this current downtrend. Around like 446, 447, that could be some resistance for the SPY. For the QQQ this week. 360, we already brought that up earlier. ARK ETF, the supply line of this wedge, you've rejected like the last 3 or 4 times you've tested it. Russell 2000, your resistance is the bottom of the previous range around 205, and then the NASDAQ resistance around 14,180. That's a huge make or break area for the NASDAQ. So those are the levels to watch to the upside if you keep going higher. And then finally, before we move on to individual stocks, let's take a look at some moving averages. Starting with the 50-day moving average. You probably don't have to worry about that for this week on most of the indices, so we can get away from that. Take a look at the 100-day now. 1 second. I think this is the 100-day, yeah. 100-day, we probably don't have to worry about that either. All right, so we're still very, I thought we would have been closer to some major moving averages, but no. So finally, we'll take a look at EMAs on the daily. Well, this is the first, Friday was the first day you closed above the 10-day moving average for the S&P 500. I'm not going to include this day, so I'm going to say since like February 9th, that was your first day reclaiming the 10 EMA. Your 20 EMA is going to be around 441. So really the 440s in general is your resistance for this week for the S&P 500. Same thing on the QQQ. Was really your first day kind of reclaiming the 10 EMA. And obviously the 5 as well. Same for the ARK ETF. So kind of the same thing across the board. If we do gap down tomorrow, we're actually going to be back under those 10 EMAs. So those could also act as resistance going into tomorrow. The IWM actually took out even the 20 EMA. It looks like, yeah, the 20 EMA as well. So that's very, very interesting. So that's my breakdown from a technical standpoint of the overall market going into the week. And I think I already talked about everything. Apart from that, we take a look at the VIX, which broke remember I talked about this, I think on Thursday night. I said you wanted to break under, it might have been Thursday or Wednesday, but I said you wanted to break under this demand line. It did, which is great. So the S&P is breaking out of a supply line on the 4-hour, this white line over here, and then the VIX is breaking down from a demand line. That's what you want to see. Remember I talked about this classic bearish divergence on the VIX last week, so that is all good, and that's pretty much my market breakdown. I'm also going to, I share this on Twitter. If you follow me on Twitter, go check it out. But I'm going to quickly bring it up on stream. I did send a full watch list to premium, but this week I also decided to send a completely separate watch list to everybody on Twitter as well. So let's see. All right, so this is another watch list of some stocks I'm looking at. Again, these are not just for this week. These are like longer term scenarios. But I'm looking at Facebook. You got a MACD crossover, a bullish cipher, and a gap fill. Okay. Smile Direct Club. We talked about this last week. Classic bullish divergence, close to an alternate bat, and it's testing the supply line of this falling wedge. Interesting. NVIDIA dragon pattern. It reclaimed the 200-day moving average, and it got classic bullish divergence on the daily. Like so many stocks, I mean, the overall market is showing classic bullish divergence on the daily, and so many stocks are showing you. Obviously, Microsoft has a dragon pattern. It's testing a very big make or break area. Okay, this yellow line and the green line is a supply line. The green line is a supply line, and the yellow line is your 200-day moving average. That's a very big make or break area. So you could play Microsoft either direction based off that test potentially. Verizon is another one testing a supply line and the 200-day moving average. So Verizon's at a make or break area, could be played to either direction. Peloton's looking interesting. It's retesting the support around 25. It broke out of a larger wedge and then created a smaller wedge and broke out of that as well. Boeing is another one. This is like the 4th time it's testing this little support zone since like 2021. You can see these 4 different bounces since just like November, and it's down sloping channel. Netflix is very interesting to me if they can get back above like 391, 392. Look at this historical resistance. You fell under it for a little bit, but only to double bottom. Now you're trying to break back above it, and you're trying to break out of a supply line. And all this is happening at the PCC of a bullish shark. And you're double bottoming at the PCC of a bullish shark. So Netflix, very interesting. These are the higher conviction ones. Netflix, BlackBerry. Again, this could take a while, but look at this really nice wedge. You had another wedge over here. It's not drawn out, but you can see how that turned out. You had classic bullish divergence as well. I mean, it's very similar to this area over here. When you had a wedge, you had classic bullish divergence, and you went crazy. Who knows? And then finally, space, very similar to BlackBerry, actually, a really large wedge, kind of similar to how it had over here. This was actually a swing, I believe, for premium members. It's like a 50% profit, like really quickly. But remember, there was like a wedge over here for space at classic bullish divergence, and the same thing is kind of appearing again. Not really classic bullish divergence on the MACD, but you have it on the RSI. So those are some stocks I'm looking at this week. The rest of them are in this channel. And Friday, we actually had a nice trade on AMD. This is the only thing I alerted on Friday, but Friday I alerted AMD calls to premium members like right over here, like right when it was testing the view up here, like 117, and the calls were up 200% by the time it got to the high of the day. And I was even alerting my scale outs, and my scale out, my major scale out was literally right here at 121 when it got up to like this high. That was like my major scale out. But I'm still watching AMD going into tomorrow morning. I don't know how it's going to look if futures are really red, but if AMD drops back down to like 119, 120, and it back tests the previous resistance as a support like it did over here and over here, I might play calls on AMD again tomorrow, just like I did on Friday, if it can bounce off this area yet again. Or flip side, if AMD breaks this area, I might play puts. So AMD's a potential trade to either direction tomorrow, but of course you never know. The news could come out and they could just screw up all of that plan. Roblox is another one. I think Anna in the Discord was bringing it up when we were talking on Friday. Pretty interesting. I mean, still in a very rough downtrend, but you have some classic bullish divergence now in Roblox, and it has a bullish engulfing candle from Thursday. Looks pretty similar to the ARKK ETF, but it's not the easiest. I mean, one could just place a stop under Thursday's low. Let's see how loose of a stop that would be. So a stop under Thursday's low is about a 15% risk, and then there's a gap fill and resistance around like 64, 65, so it's a decent reward to risk. So of course, no certainty there. So those are some stocks I'm watching, keeping an eye on, and I'll talk about some other names. CLOV broke out last week. Okay, I set it at $2 to watch CLOV. Go look at my Twitter. It was $2, like literally the day of earnings, like a couple hours before the earnings came out. I said look for this weekly falling wedge on CLOV with classic bullish divergence, and it played out to a good extent, of course, with the help of earnings. Very nicely towards the end of the week for CLOV. And this is the first time it's testing a breakout. It's already tested a breakout on the daily a couple times before, and it really didn't work out. But this is the first time that CLOV is testing a breakout of this wedge on the weekly. Okay, again, nobody cares until it's too late on a lot of these types of reversals. Okay, there was endless amounts of people that cared about 28, and there is a very low amount of people you see on social media talking about CLOV at $2. Okay, most traders and investors do the opposite of what you're supposed to do, which is buy low, sell high. Of course, I'm not saying that this is the bottom for sure. I'm just bringing up an example, but very interesting. Classic bullish divergence on the weekly long-term wedge. It's obviously going to need help with catalysts in the overall market to sustain an uptrend and at least break this downtrend, but it's breaking the wedge. Breaking the wedge doesn't mean you're breaking the downtrend. You're going to need to make higher lows and higher highs to break your downtrend, but you're at least breaking a linear wedge right now, and we'll see what the price action looks like afterwards. But you do have immense classic bullish divergence, and it's looking interesting. I actually have, I think, the 1 hour. Yeah, these are all my resistances for CLOV if anybody wants to take a screenshot on the 1 hour chart. Okay. And what else? Square, I also shared this towards the end of last week, right before earnings. I said, look at that 786 retrace. We talked about this on stream. Back tested the previous high before the COVID crash. That had a very nice bounce after earnings as well. And the only ongoing non-premium swing is currently Fisker, which technically already, it's not really ongoing because it already hit the first target, but who knows. It's trying to re-break out of the supply line of this down sloping channel, bullish engulfing candle on Thursday, bounced off of historical support area on the weekly. Fisker still looks very, it's a low risk, potential high reward scenario, right? There's no certainty that it's already bottomed, but the risk is low for stop loss traders. Of course, that depends on your position sizes, but you can place a stop under these two candle lows if you want to be a lot looser here. If you're willing to risk whatever you're willing, right? Like the thing about stops, a lot of people say, oh, 30%, I don't know if I can risk 30%. You can tailor your position size so that a 30% loss would equal your loss on, let's say, a 10% loss with a larger position size, right? So you could always tailor your risk. Remember, you define your risk. A lot of traders fail to understand that. You completely define your risk. A lot of people, are bad quoting certain stocks. You could have stopped yourself. That is something that's preventable. You always define your own risk as a trader. So, I don't know, bottom of the range. And yeah, that's the majority of what I wanted to talk about this week. I don't know if there's anything else that's open for me to really look at right now. Future is still down about 2%. Make sure to hit the like button, hit the subscribe button, and check out the first link in the description. It's a crypto donation link for Ukraine. If anybody wants to donate to Ukraine. Kiana Trades, I just saw your tweet. Thanks for sharing. And yeah, if you want me to take a look at some tickers, we can do that for a little bit. So drop some tickers in the chat if anybody wants me to look at something, and I'll get out of here after that. Looks like typically keep the Sunday streams shorter because the market's not open, just kind of preparing for the week. So I charted this like M shape on MU when it was like up here. So at least a good amount of the downtrend, the downtrend on the fifth wave kind of happened, but I'm going to kind of take a fresh look at it. MU has potential hidden bearish divergence if the MACD crosses over to red before it breaks above 96. So keep that in mind. And there's not really much to do here on MU. I mean, 1 hour chart, these are my levels. That's really all I can do for right now. It's kind of testing a breakout of this wedge, but it's really it. APRN, I'd say support I see on the weekly is around 350 to $4. Close to a bullish pin bar last week, but also broke the 200-day moving average the week before. I don't see why it wouldn't get down to test like $4 eventually. Maybe it never does, but on the weekly, that's kind of what it looks like. However, the daily is a little bit of a different story. You do have potential classic bullish divergence on the MACD and the RSI, if it'll work. So you do have some potential classic bullish divergence, and you probably could look at this like a wedge. So who knows, maybe it wedges down to like this $4 support area, and then confirms the classic bullish divergence and then breaks out. I'm just throwing out different potentials here, and you know, I don't know. We already just looked at CLOV. It'll be in the timestamps, which will come out in the morning, or you can just scroll back a little bit. BBIG, that bear flag. That's why I warned about this. If for those of you who were watching back then, I said it is getting close to the dragon breakout, but you have a bear flag that just showed up. So the bear flag pretty much played out now. You're testing support. You tested it on Thursday morning. You bounced off it 226. No mistake. All right. This is not a mistake. This is TA in front of your eyes. It's a historical bounce area. You bounced off of it yet again. And that's your make or break area for BBIG. I mean, how many times has this stock bounced off this level? So you just want to hold above that level. If you can do that, it's nice. But if you can't, uh-oh. I don't think we looked at Tesla, so we can. We did look at Facebook, though. We'll look at Adobe and Roku as well. Tesla. So Tesla, again, I'm not saying it's going to go down to 622, but it would be a very cool scenario if it did, because then you'd have to be at the PCZ of a bullish bad. You'd be at a support back from like last July, but it's not even close to there for right now. So it's not really worth even talking about it until it gets there. So I'm going to kind of take this off my chart. It got kind of close. It was like $70 away at the low on Thursday, but never really got all the way down there. So at this point, Tesla's retesting resistance. You know, the 200-day moving average, previous support from last January, and this January. So it's testing this make or break area. If it rejects it, it can maybe fall back down to retest 700. If it can break above, I'd say resistance is around 945. That's how I look at Tesla. Potential classic bullish divergence on both oscillators as well on the daily. So that's Tesla. Adobe, bullish engulfing candle on Thursday. Another one with potential classic bullish divergence. It also got oversold. And it bounced at this support, this 421 support from July of 2020, March of 2021, and last week. If you look at it like this, it might be a bullish shark as well. Close to a shark. But that's your big area, and I'd say resistance is around 500 from those highs. And then Roku, getting close to this gap fill over here. You can see some resistance around 143. It's a gap fill, lows from over here, resistance over here. So 143 is the short-term make or break area. After that, 169, and then support at 101. You can see it pretty much bottomed here, which was your lows over here and over here. So it's respecting the level as well, but still in a massive downtrend. Probably made like an 886 retrace. Yeah, it's pretty much where it went down to, and it started reversing. And another one with potential, not just classic, but triple classic bullish divergence. EVGO, bullish engulfing on Thursday. You just wanted to see it make a higher low, which it currently is, above $7, which was your low from January. The rest of the levels are charted. That's really it for this stock. There's not much of an edge I see apart from that. TLRY, you know, it's in this close to the support area between 538 and 532. So hopefully you can just hold that. And then you could definitely chart like a longer term wedge here, which it is certainly still in. So that's TLRY. And then final one for today will be Corsair. Keep hitting the like button. Check out the first link in the description if you want to donate crypto to Ukraine. Corsair, I like how it's trying to, this was actually on a watch list not too long ago. I don't know if it was only in premium or if I shared this on, I think I shared this on the stream as well, but I talked about this wedge breakout right when it was breaking out. You had a nice little move after it on earnings, and then it pulled back with the market and it bounced with the market on Thursday. But I like how it's trying to reclaim 2251. Hopefully it can start holding that. I don't know how it'll look tomorrow morning with futures, but holding above 2251, it could be very, very important, because if you can hold above that, there's not much resistance to like 26. All right, so that's it for tonight. Nice quick stream to get ready for the week. Hit the like button, hit the subscribe button, join the Discord, links in the description. If you want to donate to Ukraine, that's also in the description. Have a good week. Thank you.